Dear friends, if I had to summarize the first half of 2026 for the crypto market in one sentence, I would say this. Prices corrected sharply, but institutional infrastructure continued to grow. Bitcoin started the year at around $90,000. Today, it is trading around $59,000. That means a roughly 34% decline in the first 6 months. Ethereum had an even weaker first half. It started the year at over $3,100 and is now around $1,600, which means a decline of almost 49%. But here is the important point. This was not only a crypto-specific correction. The bigger macro picture pressured crypto. A more hawkish Federal Reserve, higher U.S. bond yields, a stronger dollar, and weaker global risk appetite all created pressure on Bitcoin, Ethereum, and the broader crypto market. Even gold, normally seen as a safe haven asset, has struggled amid a strong dollar and high interest rate expectations. So if gold is under pressure, it is not surprising that high-risk assets like crypto are also struggling. Another key topic was ETFs. Spot Bitcoin ETFs opened a major institutional door in 2024. But in the first half of 2026, we saw that ETFs do not eliminate volatility. When macro conditions deteriorate, institutional investors can also reduce exposure. So ETFs are important, but they are not a magic shield against market corrections. Now, this is where the story becomes more interesting. Prices were weak, but blockchain infrastructure continued to grow. Stablecoins and real-world asset tokenization were two of the strongest themes of the first half. Stablecoins are no longer just trading tools on crypto exchanges. They are becoming part of payments, settlements, cross-border transfers, and financial infrastructure. Real-world asset tokenization is also moving from experimentation to institutional finance. Tokenized treasuries, tokenized funds, and on-chain financial products are now becoming serious topics for traditional finance. Regulation was another major theme. Mete in Europe, stablecoin discussions in the US, and the FCA's approach in the UK all show the same thing. The unregulated growth phase of crypto is ending. The next phase will reward projects that are transparent, compliant, useful, and institutionally credible. So, the first half of 2026 was painful for prices, but important for infrastructure. Bitcoin and Ethereum corrected. ETFs were tested. Macro conditions were difficult. But stablecoins, tokenization, regulation, and institutional blockchain infrastructure continued to move forward. For the second half of the year, I will be watching 6 key things: the Fed's rate path, the strength of the dollar, ETF flows, stablecoin regulation, tokenization products, and whether Bitcoin can regain strength above $60,000. This is not investment advice. I am not telling anyone to buy or sell any crypto asset, stock, commodity, or financial product. I am simply reading the market. I don't predict, I read. This is read or dream.